probably flip those around. I would say Google clearly is at some risk here. I'm a big believer in Google, the importance of it for the internet, the oxygen of the internet. But that is different than what we're talking about today, is that this company is at most risk for more regulation around trade behavior. We can talk more about that. But you are also correct, as Facebook is a second. And then we need to really look at each of these companies individual. And I think towards the bottom of the risk scale would be Amazon and Apple.
Before we go into that, on Facebook and Google, the common thread there, at least that we are, often talk about, is online advertising. They own the majority of the market. Are we talking about going after them from an ad dominance point of view?
That's part of it. That, I think, initially gets up the antenna from the DOJ and the FTC, is that they're big, they control, call it 15 to 20% of the total online internet spend. But if you look at their behavior in terms of how they actually display results, that's probably the more critical piece here. So I want to give you a quick example. When you do a search for a restaurant, this is Google, and the first results are some Google Map results. That is something that has long irritated companies like Yelp. Their Yelp gets pushed down. And so that is a way of using their market dominance to change some user behavior. So it's pretty easy to fill in the blanks about why Google is part of this conversation, but that would be a specific example of how it works.